Good morning. Good morning. Welcome back to Market Wake Up, your one-stop shop to get everything you need to know ahead of your trading week. My name's Jordan. This is John. We're here to break down the macro mumbo jumbo. Today, we're talking all things macro. We're going to have a look at a global scale at the majors in currencies, what's going on, what's moving, what you need to be aware of. Plus, John's got a couple of seasonal plays for us a little bit later on as well. So without further ado, make sure you've got a hot coffee in front of you. Let's jump in to the Market Wake Up. John, good morning. Good morning. Happy Monday.
Good afternoon, mate. Good afternoon. Happy Monday to you. Good afternoon. I feel nervous coming into these now because I feel so out of practice with them. Yeah, just live streams in general. I just feel so out of practice with them. I'm hoping the audience today can just give us a little bit of a boost. Got Andrew in. Hi.
I feel nervous. I'll just make sure to put you on the spot a little bit more often. But no, we're just two traders going to talk about trading, John. There's nothing to be nervous about. We're going to talk tariffs, obviously. I don't think we can avoid that conversation at any point, so we'll talk about that a little bit later on. But let's talk last week first. Started off with a bang, mellowed out. Still in the same direction, I'd say, with a bang. Biggest takeaway from last week was the strength in the yen. That was my biggest takeaway. Anything last week that you want to mention on market leftovers, having a look at some things over the weekend, perhaps?
Yeah, there was a few things of last week. So obviously we had a few central bank decisions last week as well, which really kind of caught my eye. Friday was a bit of a wild day in the market as well. I was looking at how the market was kind of shaping up going into the US inflation data, which was obviously we've got some coming up this week as well. And I thought, is the market going to be rocked by this? Again, this was orange folder news on a news calendar, but for us, it's not, because it's it was the prelim inflation expectations. And this basically tries to get a survey of consumers, how they feel the market's going to be in X amount of time and whatnot. And their estimates was that inflation was going to be around 4.3%, up from 3.3%, which I thought was a huge jump. And the market reacted very aggressively to it. And this is something that piece of data, you might think that's not really going to be should be the sentiment, that really kind of drives a market. But when the market reacts to something like that, you think, okay, well, is that what the market is keeping its eye on? Then it's keeping its eye on this inflation pressure. Obviously, that makes a ton of sense considering we've got Trump and tariffs and things like that. So market, or the US market in particular, very, very sensitive to any kind of inflation readings at the moment. So on Friday, that kind of really caught my attention. And obviously Trump then started to talk about other tariffs as well, which then kind of compounded that bearishness that we saw into the end of equities on Friday, or US equities at least. So I thought that was really fascinating to see. Other than that, obviously we had NFP, which kind of went a little bit under the radar.
Which NFP?
Yeah.
NFP?
Yeah, exactly. So, and they had a revision on their previous numbers up to 307, which I thought was, again, very interesting. If you look at the report in a whole, you probably think, actually, that's not a bad report. That should be fairly dollar positive when you've got, average hourly earnings going up to 0.5%. So that beat expectations. Non-farm employment change came down to 143, but revised numbers were fairly high. Unemployment rate came down, beat expectations to 4%. So that should be like fueling a bit of a dollar positive move. And we did get some dollar positivity, I must admit. But it didn't, NFP wasn't really a big catalyst, surprisingly. It was more that inflation data that followed at 3 p.m. that really kind of gave a little bit of a drive to the market. So, yeah, I think that's kind of telling me where the market is fairly focused on at the moment. It's all in that inflation.
Which is awesome This is why it's so important to track all these different, even if they're not expected to do much, the yellow, the orange folders, and then track the market reaction, regardless whether you're exposed to the market or not, because of exactly what you just said. It tells you where the money is focusing. And if you're not getting a reaction from historically the most volatile consistent news release out there, but you are to a little uptick in inflation, then it's telling you that investors are looking at one spot. Now, the talk of inflation for yonks, right? Everyone's talking about how inflation is going to impact because tariffs, et cetera, which we believe will happen, but we believe well, I will speak for myself. I believe Trump's counter to that is to dump oil.
Yeah.
Do you still think that as well?
Yes.
Can I say we? Yeah, I can say we. Right.
Yeah.
Okay. So we believe that Trump knows that it's going to uptick inflation, but as a reactive, he's just going to dump oil or attempt to dump oil. So those just counter each other out, essentially, which in theory, great plan. What I've found interesting is when these tariffs have been coming in and this inflation talk, the inflation uptick's got nothing to do with these tariffs. You're not going to see these impact anything for another 8 months. That's just relative to what's happening anyway. That's nowhere near. What I find really, really interesting is the way investors are betting at the moment. The way you can see kind of what's unfolding, but it's like the market is backing that he will be able to dump oil.
Yes.
It's like the market is going, you know what? I trust him to be able to dump oil. Let's ignore now the inflation uptick, bit of volatility there was different, but once again, relativity, it doesn't make sense because tariff stuff's not going to come into play for another 7 months. No. So I've just found that really fascinating because every analyst in the world right now is betting on the books. Hey, inflation's coming up. Guess what? If every analyst in the world and every trader in the world is saying inflation's going up, the move's gone.
Yeah.
You're not going to make money on it because everyone thinks it's going to happen.
Yeah.
Now, historically, there are certain assets that move. There are certain assets that don't when inflation is expected to rise. We're not seeing the market play that, which means everyone is saying inflation is going to uptick. No one is putting their money where their mouth is. And that's what I find really, really fascinating, which is why I'm leading towards, okay, analysts are saying inflation is going to go through the roof, blah, 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 including us. I think it will. Traders are saying, I beg to differ. Now, my assumption is it's because he's going to dump oil. He might have another plan, but
yeah. Well, I mean, he had a bit of a boost to that last week. OPEC came out and basically said they're going to increase supply. So that's a big plus in his favor because
hey, we'll help you, Mr. Trump.
Yeah, exactly. So he really had a good week in a way. We had a really interesting comment on one of the videos last week. I was talking about sort of the Japanese yen, and there was a comment about why is sort of the US dollar sort of getting stronger. And I can't remember. I might have to get it up, but it was basically kind of talking about what's Trump's narrative, because Trump kind of wants his cake and eat it sort of thing. He wants lower US dollar to help US manufacturers. However, he wants to keep the US dollar as the world reserve currency and at the same time try and drive down inflation, but then add tariffs. It's kind of like it's so sort of contradictory, I think, of his plans in a way. But it's just that makes it very difficult to know. I know you said before you feel like it's quite clear where to go to in these kind of situations, but I think from a week-to-week basis, it can be very difficult. If you're looking at it, maybe, okay, this is what should perform well over next year, then you get a kind of rough idea. But to trade it on a day-to-day, week-to-week is quite difficult.
Yeah, you just got to look at the whole operation. What does Trump want? He wants a stronger America. He wants things being manufactured, built, spent, and exported from America. He wants to be in control and he wants to be in power. He wants it to be the reserve. Like, he is just extremely pro-America, right? He is. So then you need to look, okay, what is going to make pro-America. Now, it's business. Same with politics. Everything is business, which means there are always sacrifices.
Yes.
So you have to figure out, okay, where is he willing to sacrifice to go full, like really pro-America? Where is he willing to? Right now, the obvious one is in the government spending and all those different departments and stuff losing their jobs. But where is it that he's willing to sacrifice? And then the ones that he is willing to sacrifice that are quite hefty, that are quite large, like inflation, where is he willing to countermeasure? And that's kind of, you piece together his puzzle that he's building there. Like you said, it can be confusing because you're going, hang on, that makes no sense. That's going completely against what you're doing over here. But that's the purpose. It's because it's like hedging his bet. Okay, we're going to do this and it's going to cause this. But to rectify this, I'm going to do something over here, which is going to rectify that. And I find that fascinating. I don't understand the full picture yet. So I find it extremely confusing, but I find it fascinating trying to figure out, okay, what are your countermeasures? What are you trying to do? If you track it, everyone at home, you're going to learn a lot about global economies just from following Trump's moves here and the reactions that he's trying to get and the different way markets move. I read a piece this morning saying he was actually going to cut down some of the regulation on ETFs listed on the exchanges as well. So markets are going to be directly impacted here for a little minute. So be ready for that. But yeah, I find it so fascinating to see the full picture. You then look to how other countries are reacting. I had a giggle this morning. I really did. I had a giggle at my own government.
What's happened?
25% tariffs come out right on steel and aluminium. Which hurts us, hurts Australia. All right, whether directly or indirectly, whether it's through China, the tariffs they hurt Australia. And our Prime Minister said, right, I need to get Mr. Trump on the phone. We need to have a discussion. And everyone's obviously probing, what are you going to do? What are you going to ask? And he explained that the tariffs don't tariff us. It's not a tax on us. It's a tax on the importers. And we have a trade surplus with the US, which means they actually buy more stuff from us. So it's only going to hurt them. And I watched this and I went, our Prime Minister has just shown you Trump's plan, but said it in a way that he's going to use it as a reason not to do Trump's plan. I was like, hang on, you've just outlined exactly what his plan is, and that's what you're going to propose to him to make him not do it, that it's going to work, because his ambition is to not get his country to pay more taxes, just to build the aluminium and steel products in the US, not Australia. And I was just sitting there going, you've just, like, fair play, you worked out it. I mean, that's great, well done. But using that as an argument, I was just like, this is fascinating. This is just really
I'd be interested to know how much the US would produce of that type of metal themselves. You know, I'm not familiar with that. So maybe they're still gonna need to import, aren't they? At the end of the day.
Well, that's what he's just trying to get the businesses that do to second guess it.
Yeah.
And go, hang on a minute, is this worth us? You know, should we negotiate a better deal with these guys firstly? And secondly, is there a way we could just do this on home soil? Yeah. And that's what he's trying to get every single business in America to stop and go, either I've got an excuse to make a better deal because of these tariffs. Oh, it was Trump. Sorry, I got nothing to do about it. Or actually, it's going to work out cheaper if I just build it right here.
Yeah, he's got to try and do something to get involved with his plan, but he's also got to try and bring some kind of incentive to want people to do it, because I just think tariffing everybody is not the way to do it. Because if I was a business owner and looking at sort of, if I was importing and just saw that my prices are going to go higher, I'd be like, okay, but China still do it, and they still do it 50 times cheaper than what the US are ever going to do, you know, because of the labor cost that the US will probably charge versus the labor cost in China, X, Y, and Z. So yeah, it's very interesting to see how this is all going to kind of manifest itself. I did see a report that a lot of companies are preparing legal action against Trump and the government. So, and I mean, you know, just pull the grenade. Just pull the grenade.
Yeah.
So,
well,
yeah.
Yeah. legal. Yeah. Anyway, that's just yeah. So I wanted today to have a kind of look over what's been happening. Have you checked the VIX recently?
I have.
It's been a while.
I have been trading the old VIX.
You've been trading it?
Not directly. But basically, when the VIX has been rallying, I've been waiting for the pullback on it and then buying into the S&P on a bit of a day trading situation, which I just think is I'm just looking at that as like, this might be my little strategy for the year, because it just,
honestly, it's a super good one.
Yeah,
pretty good one. Just code it every time the VIX upticks. Just have some fun.
Yeah, and which is helping my yen trades as well. I've 2 trades of last week with pound yen, Swiss yen, really on the Forex front. Tried to get involved with a little bit of dollar Swiss to the upside, but ended up missing my entry. I was a bit shaky on that one, and I decided not to pull the trigger on it because I wasn't as confident as where the dollar was heading. So yeah, and I didn't want to hold it over the weekend either, because of I reckon from now until sort of maybe August, we'll probably still get gaps over a weekend on the US whenever Trump comes out with something. So yeah, I didn't really want to hold anything in that sort of kind of vein. But I just think at the moment, volatility is going to be, I think, an area to watch. We're seeing it spike quite regularly at the moment, and to me, that is an opportunity. So I feel like I'm kind of trying to play that a bit.
Yeah, I think short-term trading is the play this year. At least early this year, not having especially that weekend exposure. And for a lot of traders at home as well that trade with leverage, that's just be careful, because these gaps could be. We've got no idea what could happen over a weekend. It's not just a matter of looking at Trump anymore. You're now looking at every other nation in the world and how they respond. Do they want to do something drastic? Do they want to do something, grab the headlines themselves or prove a point? There's a lot of tension. I went through today and had a look at experts' forecasts for pricing throughout the next year, really into the end of the year. Yeah, I'm going to quiz you.
Oh God! Okay.
All right, I'm going to see how closely you get to this. So the euro. Right, I'm going to make it easy. All right, the euro. Like, we're talking December 2025, higher or lower?
Can I go look at the chart?
Yeah, absolutely. What? Have a look at the chart and show us what your thought process is.
Well, I'm gonna. So, did you just tell me what they said? Because I didn't hear you. I'm pretty sure. No. Okay. Right. So, can I guess what they're forecasting?
Yes.
I'm going to guess they're forecasting parity.
Parity.
Is that right? Yeah.
Exactly. Yeah, the unanimous decision is parity by December 2025.
Yeah, I mean, I get why they're saying it. I mean, I said it to you when it was up at 111. You went, no, it's going to reach 112 first. And I said, well, yeah, but it could reach parity as well.
Yeah.
And to be honest, yeah, it works out quite well in that sense. And yeah, look, parity is not too far away from where price is at the moment, is it? So, that's not an outrageous statement to say euro dollar.
It's not like analysts to go outrageous, though. They do the safe bet. They've got a job.
Yeah. Exactly. It was outrageous of me to say when it was at 111 that it's going to parity. That was outrageous. And that's why I kept losing the bets last year. I was taking the heavy side of the bets. I was just to let everybody.
You put yourself in that position.
I did.
You put yourself in that position. I'm not.
Well, I believed in it, and look. So yeah. Okay. But yeah, I think probably parity, not far from parity, does make a lot of sense in the current market conditions that we're in right now. Am I actively shorting that to parity? No. Big reason for me is. I just saw a headline out of Macron today, basically saying that the Europe have got to invest. Trying to kind of get the European Union to kind of back themselves and start putting some money into it. That could be a fairly positive thing for Europe. Obviously growth forecasts haven't been great in Europe. That was the whole reason why we were saying Europe was in the bin, and nothing has really changed on that front. I think the real downside or negative to euro at the moment is the fact that Trump's tariffs haven't come in yet on Europe. Just kind of talked about them.
That's what I mean.
Spoke about them. So I think that's why euro is going to remain a little bit under pressure until that announcement. It might just be like, well, okay, well, there's no point buying euro at the moment because they are coming. It's just we just don't know when and how do you calculate for that risk, you know?
It's just that like anxious child, like a group of friends are getting in trouble and he hasn't been in trouble yet, and he's just kind of like, oh, can I squeeze out of this? But no, I think we know that Europe will get hit with tariffs. Yeah.
So I don't think parity is that out of the way. You know what I mean? To be honest.
Stephen's nailed it. You get a tariff. You get a tariff. You get a tariff. But no, man, I can see your questions as well. We don't offer a mentorship, but you can ask your questions. We're live here. We do 2 videos a week. We also have a newsletter that goes out on Friday. We give you all of the information that we know. We answer all your questions completely for free, so you don't have to seek anything like that. If you have a question, feel free to just throw it at us. We'll do the best of our ability to answer it to you. So that's the euro, right? They're the anxious child. We're looking back at parity. Let's go home base, pound.
Yeah, I think the UK is going to struggle. Now there's a couple of things here that are kind of brewing for the pound at the moment. I was looking at the commitment to trade reports, and hedge funds are starting to get a bit aggressive buying a pound. I don't see how, to be honest, because of, you know, Bank of England last week cut interest rates. There's a lot of talk of, you know, stagflation. There's a lot of talk of the fact that, well, the Bank of England slashed growth forecast in half. Not saying that they're very good at predicting what happens in the markets, but at the end of the day, when your central bank's coming out and slashing growth rates in half, does that really kind of tell you a picture of what's going to happen to their policy going forward? You know, they're going to think, well, growth isn't doing really great. We probably need to start cutting some interest rates to get the economy going. The things with the UK, the problem is inflation's still a little bit higher in the UK at the moment. They have forecast that to come down. So that will also kind of help fuel that kind of rate cut cycle. But I think we talked about this at the start of the year. I think the Bank of England are the ones that are a little bit behind on cutting rates at the moment. And I think that's going to be a problem for them, because what I can kind of envisage happening is a lot of central banks are going to slow down their pace of cutting rates, whereas the Bank of England are going to just get started. So I think that's where we're going to probably see the difference in policy coming out of different countries and different central banks, and then that's going to then see a lot of potential weakness for the pound in the. I think over this year it's going to be difficult to be a very strong buyer of the pound unless something drastic happens. You know, fiscal policy has been a big story in the UK as well, that, you know, we're going to get higher taxes and less government spending, and, you know, there might have to be some kind of pullback on that, because I don't think Reeves is going to make it till May, to be honest, if she continues to go on this little path of every time she has an interview, their growth is going to be there. Their growth is going to be there. How long are they going to... honestly, the market will boot her out at some point if it gets, you know,
we've seen it before.
Yeah, exactly. If they get frustrated, they'll just be like, right, okay, we'll sell gilts, and then just drive it for the floor, and she'll be out. So, you know, I think the pound
now, like, the market knows they can do that is dangerous territory. Right, this is where you start going, oh, hang on a minute, like, just the richest people in the world can just dump gilts and we lose a prime minister, like, whoa. But all right, so looking to the end of the year, what are you thinking?
Gosh, I'm not confident on pound dollar, I must admit. I'm not confident on pound dollar. Pound yen, on the other hand, I'm fairly confident on some.
No. Go back.
Go back. Yeah, I'm talking sort of 179, 170 range on that. I don't mind. No, I'll go back. Pound dollar's a hard one for me, you know, because I think if we're gonna get euro to parity anyway, pound could probably feel a bit of that pressure as well. They're fairly correlated together, so we'll probably see some downside, maybe in the 1.2s. I'd probably say that's where the
1.2.
Yes,
that's 2 for 2. You're hitting the nail on the head with where the markets are forecasting.
Someone sign me up.
It is sideways pretty much all year, with a little bit to the downside. A little, and 1.2 is not far. Where are we at now? We're at 1. What are we at? 1.239. Yeah.
Yeah.
So it's really not that far away from.
We're trading at the moment.
Yeah. But by the end of the year, 1.2. Yeah. Look, you're nailing it. You're nailing it. Now I'm going to throw the fun one at you.
Oh, okay. Is it
the Aussie dollar?
Oh.
Right, I'll throw you the yen. Go the yen.
No. I'll play the game. I'll play the game. Aussie dollar. See, this is what makes it so hard. It's just because of the situation with China now, and this is where it starts to get. I think Aussie's going to either have a boom or bust year. To be honest, I think if Trump works with China and they work together, and you see this kind of partnership come together with a fuel of, them stopping the war with Russia and Ukraine, I think that's probably very positive for risk assets. And I think Aussie usually feels an impact from that. They'll also feel the benefits of less tariffs on China. China already talking about adding big stimulus this year as well, which they did talk about last year, but they didn't do. But maybe they've smelt the coffee and think, yeah, let's try and do something now. So yeah, I think Aussie. I would actually expect Aussie US dollar to be higher. If I was looking at just Oz futures on their own, I'd probably say a little bit higher. 64.
Wrong, lower.
Yeah,
lower. You can be optimistic about a partnership
on China.
You're optimistic on China. I'm not, and I don't think many market participants are optimistic on Trump doing a favorable deal for China. So, yeah, no, you're 2 for 1, 2 for 3, 2 from 3, 2 from 3 on there. But the Aussie dollar is down. But there is. I was surprised when I saw the analysts' thoughts because it's quite negative dollar, and I was like, well, that's interesting because I reckon it could have a bit of upside. Now, if we get slapped with export tariffs, particularly in mining, plus China's slowdown, we're screwed. So I can understand why a lot of people go, I don't really want to be buying it. But if we don't, if we are just that kind of anxious guy that's sliding through like this, there's a lot of upside potential for exports. Now, all the climate crisis stuff, I don't think Trump really cares about. Correct me if I'm wrong there, but I think he just cares about business. And that helps us because we're not a very climate-friendly nation. We mine. That is literally what we do. We're a big island, and we dig it up for gold, oil, coal, iron, you name it. We smelt it and we ship it off so you can have a hot kettle. Right, that is what we do here. So anything to kind of ease those restrictions on that stuff, I think could benefit, but only if we're making money from what we're exporting.
I think
and that's a big question.
Yeah, that's why I think boom or bust for Aussie. I think is a good way to put it. Yeah, but where are they saying on price?
They're going all the way down to the 0.6s.
Oh, okay, right. Yes. Yeah, so again, that's not too far away, is it? We're at 62 right now, 0.6s. Yeah, 2020 lows maybe.
Yeah, they're looking a little bit low. Now, keep in mind, these are analyst predictions. So if they're like a little bit down, they're really like, well, I think it could go a little bit further, but I don't want to risk my job. Yeah. So I'm just going to mitigate it a little bit. Yeah. Whenever you see like a professional, and I say professional, we are professional analysts, but I say professional analysts as in like white collar.
Yeah.
Whenever you see their predictions, just know that they've mitigated a little bit. So when they are wrong, they can be like, oh, it wasn't too far off.
Yeah.
And when they are right, they can go, see, I told you so. Like they find that middle ground, so they keep their job. Always important to keep that in mind. Last one for you, yen.
Yeah, I think this is going to be yen's year.
It's off to a good start.
It's off to a great start, and I think with their I think yen for me, when I look across the board at kind of central banks, yen is the clearest out of them all, which is something I don't think I've ever said out loud before. So I just think they've got a bit of clear policy in place of, yes, there is growth here, there is wage growth, there's inflation that is moving higher. Forecasts are suggesting anywhere from 0.75% to 1.5% on interest rates in the future. And I think that, to me, is a big positive to be a buyer of the Japanese yen right now. Going into a year as well that is essentially on edge. Yen is usually profiteering off of that kind of influence in the market, on that sort of air. So I just think yen is probably the play to be in throughout 2025. So yeah, that's where I'm going to be doing a lot of business this year, I think, is with my favorite Japanese yen. But when I look at dollar yen prices, I'm going to say something quite outrageous, and I'm going to say 140.
Andrew's gone with you. With you.
Andrew, I didn't see that. I'm going to say 140.
140. So you're looking at 2024 lows.
Yes.
Do you want to know the analysts' predictions?
I honestly, I wouldn't be surprised if they said higher.
162.
Yeah, I wouldn't be surprised.
Breaking the 2024 highs. They think they're going to break the 2024 highs by the end of the year. Ooh, look at this drama. There's drama in
it. Don't get me wrong. A lot of reports when I was talking about the yen previously, I did say this could go to 161 before seeing a drop again. But I just don't think. I think if it got to 161, I think we'd see intervention again.
So, either you've got a trade, or you're terribly wrong.
Yeah.
There's only one way to find out.
I'm going with the hedge funds, because to me, when I look at the sentiment data, hedge funds are continually buying and building their position on yen. So I'm going to follow them guys.
Yeah, that's
me well so far. I'm not going to go back on it now.
Well, I can see conditions early this year being positive for the yen.
Yeah.
I can see your point of view from a macro standpoint. Not enough to where I'd back it based on macro. You see, if I looked at something like the euro, I'd back it based on macro. I'd be quite comfortable just going in right now and clicking short, not looking at technicals, not looking for a seasonal, just overall positional trading being short there. The yen, I'm not sure. I would need more support. I would need to build a bias. The Aussie dollar, no, I don't want to go either way. The pound, I think range bound. I agree with you. I think range bound trading is going to be like the way you're trading the VIX at the moment. I reckon the pound's going to be very similar throughout 2025, but I have been wrong more times than you can imagine. And I expect to be wrong again moving into this year. I'm looking forward to it. I'm still here. I'm still swimming.
Yeah, exactly. No, but I agree. I just think that when you look at kind of the currencies that I feel could outperform every other this year, I do think it's the yen, because they're going in the opposite direction of everybody else, essentially.
Easy. Well, I hope you guys enjoyed today. It was a little bit different. I wanted to quiz. He said he was a bit nervous for the live stream, so I wanted to make sure I put him on the spot. But if we learned anything, it's that you're actually not too far away from majority of the analysts, apart from you got two, but Japanese yen is your firm stance. So I'm looking forward to seeing how that plays out in 2025. Tomorrow we've got a video coming out. Thursday we'll have another video coming out. Then Friday you'll get our newsletter. We'll be back again next Monday to do this all again. So guys, if you did enjoy it, make sure you hit the like button, subscribe, join our ecosystem. There's plenty of places you can find us and chat to us. And we'll see you next time. Take care.
Peace.